everyone to our Diwali party here at NDTV Profit. This is exciting, guys, because
You're at Pints at Wisdom.
we have, and we have taken the conversation out of the studio and we've invited some of our friends. So great to have you here, Vikas Khemani, Mihir, Vora, Pankaj Murarka. Thank you so much for joining us on this different way of celebrating Diwali. A time of fun, time of hope, time of optimism. Vikas, let me start with you. Is this Diwali seeming special to you, or something which we might see a bit of challenge?
Every Diwali is great, and I think so is this Diwali. I think if you see, last 1 year has been a great year from market's perspective. All of us are far more richer, far more happier. Indian economy is doing very well. So I think this festive mood is, I think, by and large, very, very good. And that's how I think we all should celebrate. Of course, you know, the recent correction, consolidation is all part of the game. I don't think it's anything disrupting the story of India. So I continue to believe in India, great story. So yeah, we should not worry about it. I think we should continue to celebrate, and I see no reason. Of course, there will be times of correction, consolidation as part of it's a course, par for the course, happens in every market, and we will see that. But India is one of the best wealth creation story over next 1 decade. That will continue, and that's how we should approach even this Diwali.
Yeah, and what better time to talk about wealth creation than during this festival? Mihir, what is the formula of wealth creation we need to think about in this Samvat?
Look, as Vikas mentioned, Diwali always starts with hope. And India has never disappointed, hopefuls and the positive people. So I always think that, given the decadal story that we have, it's always good to start with hope. And the point is that the way to create wealth is just to have belief in what you're doing, right? And if you believe in India, then you will stay invested. If you don't believe in India, you will not stay invested. You'll be a trader. But if you believe in the long-term India story and you stay invested for a long period of time, Diwali, Christmas, next Diwali, you'll continue to make wealth.
Traders watching will be saying, but we also believe in India. We still trade.
Absolutely.
The time horizon could be different.
The time horizons are different, but as long as they are trading on the long side, it's fine, I guess.
Pankaj, how are you feeling? Last year or this year has been phenomenal. Everyone is richer, like Vikas said. And in fact, me drew it to my notice that for 9 years, we haven't seen a correction. Calendar returns every year have been positive. So we are sitting in a good place. This time around, of course, the economy is supportive. China, luckily, in some ways, is not much of a competition as the way I'd like to look at it structurally. Are you excited, confident that the next is going to be as great as the year behind us?
I'm a slightly more medium-term thinker. I believe India is not a decadal story, but a story over the next 25 years.
अच्छा decade is short term.
So, and I think just like our economy will make a new high because the economy is at all-time high in terms of size every Diwali over the next 25 years because India is going to be a secular growth story. I don't see any reason why the index should not make a new high. Every Diwali should be a new high for the index. So I think it's a very given thing that, India is the story in the world outside of US, any equity markets. The only story or the only secular growth story in the world today is India.
They've called it the fastest growing large economy, right? That's the phrase they use for India now.
So we are the only secular growth story out there in the world.
Just one quick one on that. I know, this is great. We all talk about 25 years, but hey, we're all middle life now, right? I'd like to enjoy this money as opposed to just leave it for my kids. Let's talk, and I know a structural bull run is made up of many, many small cycles as well. Do you feel truly medium term, it's going to be a good cycle? Because somewhere I feel like we borrowed some returns in the future, maybe. Vikas will, I know, say that's not true, but I'm going to talk about next 1 year.
That could happen at the index level, but my experience of investing in India over the last 26 years, and some point of time I used to run a large fund managing about $5 billion US. In my 26 years, I've always had more ideas than the money at my disposal. You give me $5 billion tomorrow, I can invest in the next 10 days.
Okay, more ideas than the money at your disposal.
At any point of time I've had in my career. The beauty of India is, as a growth investing that I practice, the universe or the pool of growth companies just keeps on expanding. And you're spoiled for choices. no other equity market in the world, and I have some understanding during my Merrill days, I used to do some regional and global investing, so I have some understanding of the world and of the region. No other equity market in the world gives you the kind of choice and the breadth of investing ideas that India offers. And I think the pool of growth companies in India will just keep expanding over the next 25 years. I think India is a paradise for growth investors.
We want
Give some interesting data here since Pankaj mentioned this. In 2001, number of companies more than $1 billion market cap were only 20. Today we have 600 plus companies.
25 years.
Number of companies more than $10 billion were only 2. Today we have 110 companies. We had no companies more than $100 billion. Today we have 4 companies. So this is how size and scale sort of changes of a country. And I do agree with, I often said that we are spoiled for choice.
We are lucky to be born here, right? In so
Absolutely.
many ways, because there is a home bias in some ways for us as well.
The cutoff for the small cap is now close to 30,000 crores.
Which is to large cap.
Which is
In many ways, Warren Buffett has always said, right, that you got to be lucky to be born in US at the time that he was born to create wealth. I wonder if that's true for the next 25 years for India.
It is. I mean, see, we are a product of the bull market.
What he says, the ovarian lottery.
Yeah,
We are product of India bull story.
So let's lay it out here. Now, for people who are watching this right now, let's assume they're in sync with the argument that we are in a long-term structural bull market, right? But we want to also think of what will happen over the next 12 months. Will it give more opportunities at lower levels? Is that the higher probability, even in the long run? Or do you believe from this Samvat to next Samvat, the party continues? Either, any of you. Let's start with, okay.
So my view in this is, look, we have had a great last 3-4 years from a returns perspective because of the transformation we've seen of India. 2014 to 19 or 20 period, a lot of foundational work was getting done, and then COVID happened, right? So benefit of that actually got compressed in last 4 years. So we are exceptional. So I think the only thing which investors should not do is expect same kind of returns, what we have had in the last 4 years. And when you have, and there's no doubt about it, there are pockets of excesses in markets for sure, right? Markets have kind of swung on the other side, and partly it has got corrected in the recent times. So I think first thing in my opinion investors should do is taper down the expectations. I think we are right now in a phase where probably maybe next 3 to 6 months we will be in a tight range to consolidation phase. Maybe we will be in a
And much required,
much
right?
required, right? 22 to 25, 26,000 kind of narrow range we will be there in terms of Nifty. But whenever markets move in this range, right, you get great opportunities because stocks correct. In this period, index might remain in this range, but stocks correct 30%, 40%. Already we have seen many of them.
So have you
correcting.
gone shopping in the last 1 week?
No, so you don't have
Bargain
to be in a
hunting?
rush. What I'm saying, see, today it has just started. The consolidation phase has just started, right? So you don't have a rush. So you basically keep your shopping list ready. You keep your ideas list ready. You keep your company's list ready, right? And like Pankaj said, I again completely agree that there are always high conviction ideas where you think that 5 years down the line, will you make money? Answer is yes. Only thing you have to just put up with the short-term volatility in short term, which is fine. So I think given the nature, I feel that of course from this year to next year we will make positive return for sure. I mean, at least I feel that we will probably make 14-15% return unless some
14-15% return from this year to next year.
Next year, unless some sigma happens. But I think probably it will come in a sort of step. I mean, a sort of a phase where you could see painful phase. You could see the mood right now is in some sort of consolidation range, and there are a few events lined up. So I think even in that context, I would say that keep the expectation low is, in my opinion, is the mantra.
Pankaj, just on the point of the events, and I'll take on from there. What are the big events which you think can really move the needle? Because India has, for some time now, not necessarily been following global cues. So far on the upside, and now on the downside. We're not responding as positively as maybe global markets. Do you see that continuing?
That might just continue for a few more weeks, because the fact is, for the last 2 years, India was the only market which was performing amongst the emerging markets, and India is an outlier economy. Now that you're seeing the US getting to a rate cut cycle, so essentially you're seeing more money come to emerging market, and there are markets which are trading at 50-60% discount to where India is. So people are trading those short-term tactical asset reallocations in that sense. But I don't see that as a concern from a next 1 year perspective. I think eventually money will flow into India, because there is a consensus now globally that India is only secular growth story. Any rebound you have in China or any of the regional markets is more a cyclical rebound, but the secular growth story is out here in India.
But still 90,000 crores of cash pulled out by FIs in the month of October itself. Any of you? I mean, why that?
That reflects the depth of the market that we could absorb all of that.
Or
So India has
look at
become a
it
large.
positively as well. Yes.
Now it's a market where you can put in, you can take money, $10 billion out,
That is still
and
too much.
not yet, have a meaningful impact on the market. That shows that this markets are matured, and there's depth to the market. We are now the 4th largest market cap in the world.
So how long until the China, let's go back to China phase ends? What do you guys think? Or is there a lot more left in the, we were underweight China, let's now make do. Is there more of that pain left?
So I think two things should be seen. See, whenever Fed raises interest rates, money gets pulled out of emerging markets. So last 3-4 years, we were seeing a lot of that pulling out happening across all emerging markets. So did India. And as that rate peaked out and started looking down, or started the coming down, we started seeing money flow happening, right? And that's where we saw flow happening. And in that situation, India was overweight. And as China stories kind of looking for a tactical bounce back, now I don't understand China as well as I do
I
understand
don't think
India.
China understands China as well. So that's okay.
So I think to that extent you might see tactical allocation happening, but eventually I am telling you, if foreigners were to become in equal weight on India over the next 10 years, we will receive at least, if not more, $1.2 to $1.3 trillion of inflows over the next 10 years. Now, if you look at that journey, tactical short-term flows can come, and I mean that nobody knows and nobody can predict. But structurally speaking, there is no way, in my opinion, any country, any global investor can afford to ignore India. If you remember, there was a time when Japanese economic miracle happened between 65 to 89. There used to be Asia funds. And then Japan became a separate asset class. So people started calling Asia ex-Japan.
Yeah.
I see a situation where you people start seeing India as a separate asset class. Whatever emerging market, ex-India, Asia, ex-India will happen. So I think that is the sort of, whether it is 3 years, 4 years, 5 years, it will happen. Not aspiration, it will happen.
It will happen.
It's
Just
a
a
question
matter
of
of
time. And more people realizing India's story, more people getting to know India's story.
I mean, we're definitely on the map now. Maybe, but I want to ask you
No,
this,
just
right?
sorry, before you ask the question, China is something that kind of niggles me a lot, because people keep asking the same question on China. People pull out of money out of India. Plus, China has had the world's dream run in economic growth from the 90s, late 80s till now. For 30 years, China has been the fastest growing economy in the world. And investors in Chinese stocks have made zero.
So that's what I want to ask you.
The point is,
People
if
say
in
the
your
Indian
dream
market-
phase you did not let people make money, now that you're at the peak of your demographics, you're desperate for growth, and the measures over the last few months clearly show that they are in a state of panic about growth and demographics. How are you going to make money in China when they have already passed their prime?
So we shouldn't compare ourselves to China. because
Absolutely
if I-
not.
it's a very large market.
Absolutely not. Yeah.
Let me ask you this, right? And I think because you brought that to our notice, where you compare data, where you've had a few large cap companies 20 years ago, now the number is far bigger. Where will the growth come from? I know we talk about value in the large cap space, but the growth potential really sits in the broader markets, right? If you had to stick your neck out and pick up companies, pick up stocks, where would your bias sit? Because a large cap company can only grow that much. Or a
Absolutely.
small cap company, the world is your
Absolutely.
oyster.
So your question has the beautiful answer. Again, since we are all students of statistics and data, 15 years ago, 20 years ago, the top 100 companies, which are large caps,
Yeah.
used to be 82% of the market cap. Today, they are only 60%. 40% in mid and small caps, right? There are 1,100 companies with a market cap of more than 2,000 crores. And what we did, because we recently launched a small cap fund, we did a study of high growth sectors and the other sectors. Other sectors being traditional ones like, the lending banks, the IT companies, the large cap IT, etc., utility. But if you look at all the high growth segments, like for example, say auto ancillaries or hotels or all the chemicals, infrastructure, manufacturing, real estate, which will grow faster than the rest of the economy. They form 80% of the investable universe in terms of number of stocks, right? So if you want to be in the highest growth segments in India, you have to be in the broader market.
I have a question though. I mean, why this feeling that large caps will not give multi-bagger returns? Because US is a classic example wherein the larger companies have actually given multi-fold returns, right? So if the large caps have valuations in your favor, can large cap investing not generate multifold returns?
No, I think that's a wrong impression. According, I don't agree. See, large caps will give. I mean, we've seen ICICI Bank giving 5x return, Mahindra 5x return, Tata Motors 5x return in last 3, 4, 5 years, right?
Your portfolio is biased to large cap or broader markets?
No, see, we don't really. I mean, there is obviously product construct around each product. There's a defined criteria. But point I'm trying to tell you to Neeraj's point that even large caps create a lot of wealth. The point I think broadly is what even Mihir is also referring to is that India is happening in a very broader space. Today we are spoiled for choice, and especially when India in any economic transitions, the smaller company finds higher growth on a percentage basis for a long time, and that is what results into creating larger returns. That does not mean that larger caps will not create returns. So if larger cap hypothetically creates 15% return, smaller caps might create 20% return.
No, but which is what investors want, right?
That's
so therefore, currently, paraphrasing Samina's question to each of you, and Pankaj, I'll start with you. If you had to create, if you had to put in a fresh 1 lakh rupees, sorry, I'm not insulting. I mean, you guys are doing much more.
1 lakh crore.
1 lakh crore.
But good question for our viewers. It's not a masterclass for Pankaj Murarka.
That is a large sum of money for me.
A large sum of money for anybody. It could be 1 lakh for somebody,
1 lakh
1
rupees
crore
too
for somebody, right? How would
Very
you
difficult to
construct
manage
it?
1 lakh rupees.
How would you construct that? Large cap, mid cap, small cap, and sectoral.
And I'm going to add another layer. Would you upfront it or would you stagger it?
So let me answer that. I think in financial markets we do create products and you create products around large cap, mid cap basis the risk curve and so on and so forth. But dispassionately looking from an investor's point of view, every day when I look through my companies or I talk to my companies or I look around what's happening in the economy, and I look from a slightly more medium term to longer term horizon, I feel extremely excited about the opportunities that I see in India and the kind of money one can make. I think the bull market, probably we're in a very early phase of this bull market in India.
Really?
I think so, absolutely. If you really ask me, the key in long-term investing is to make disproportionate returns or what I call non-linear returns.
Then it balances out eventually.
Yeah. I see there are enough number of businesses in India which will deliver non-linear growth over the next 5, 10, 15, 20 years, whatever time horizon you want to take. Yeah. Some of those spaces where this non-linear growth will emerge, to me, is one clearly technology. Technology is at a stage where it's disrupting or challenging every industry, right? From established industries like let's say automobile, ICE engine has been around for 100 years. That industry is at the cusp of a very cutting edge transition. Companies who do not transition to clean fuels, EVs, will risk their survival 10 years out. And it creates both challenges for the incumbents and opportunities for new players.
Sure.
Across each and every industry, technology is cutting through. So I see huge opportunities in technology as a sector in terms of creating non-linear growth.
But why the wide bucket? Help us understand what within technology. Or
Well,
what spheres?
I'm a perma bull on tech. We've discussed this earlier in disruptive tech, and within that, the whole tech ecosystem in terms of whatever tech companies are there. I think
None of them will get listed now.
yes, absolutely.
Most of them.
And these companies are still small.
Yeah.
These companies are still. Please understand. And just relating back to, I think you made a very profound point on the large cap wealth creation in US. Large caps in India are still mid caps from a global perspective because India is a small economy. In $100 trillion of global GDP, India is 3.5% market share. India's market share will go from 3.5% to 10% over the next probably 10 years or 12 years. So our large caps are small caps from global perspective. They will become large caps from a global perspective. When US peaked in 2007, the largest bank in US, Citibank, was $1.2 trillion market cap. HDFC Bank today is at $250 billion.
No, it's a big run rate.
Why can't HDFC Bank? I firmly believe HDFC Bank will be a $1 trillion market cap some point of time in the next 15 years.
So you made a point about new listings. You mentioned it actually brings me to something that I wanted to talk about. And this is a good time. Let's talk about shopping lists now. And as IPOs come in, there is a lot of excitement about IPOs from investors, but not all of them have really hit it out of the park. Are you excited, Mihir, about the kind of listings that are lined up? Or has that excitement been tempered a bit, even as the market mood has tempered?
So I look at IPO like any other investment, frankly. It's all about the same parameter: growth, valuation, quality, etc. So we are excited about IPOs to the extent that they offer some value left on the table. If it's already fully priced, then it may be an excellent, high quality company. But ultimately, I need to make money. So I would evaluate IPOs with a little bit of margin of safety compared to a listed company. So in the same sector, if a company is trading at a certain valuation in the listed space, I would expect at least a 20 to 30% discount in the IPO. Otherwise, there is no point in participating. So we look at it on a case-to-case basis. Having said that, as you know, we discussed, so many private equity and VC-funded companies have emerged, are there out there, exciting companies in the unlisted space. That in the next 1 to 5 years, you'll see a whole host of new segments emerging. Frankly, there was one study by Bernstein, if I remember, a couple of years ago, saying that companies which did not exist, say, a couple of years ago, by 2030, probably can be almost 5 to 10 to 12% of the market cap.
New ideas.
This is new market cap.
Yeah, so therefore the extension to Pankaj's answer, so he believes technology, and that is his core. What is your core? I mean, your key favorite to ride this India theme?
See, India is not doing core tech, but if you use tech, for example, if there are companies which are going to do work in AI processing or AI linked modeling, etc., then that can emerge.
No, so
we already have
like
companies. I have a listed companies today. I don't really invest in the unlisted.
So in listed, what is your favorite?
So in listed, I think the biggest thing that we are seeing is currently physical asset creation, because my firm belief is that unless we create physical assets in manufacturing, infrastructure, and
It's
real
an old
estate,
economy.
we cannot grow. We cannot grow at 7% GDP. My core assumption is that just by consumption and by services, which has been the growth driver for the last 10, 15, 20 years, we cannot grow more than 5.5% now. To grow above 7%, we will have to create manufacturing assets, infrastructure assets, real estate assets. And that's when engineering, cap goods, construction, power, defense, railways, real estate, that whole gamut has to do well, without which our dreams won't be satisfied.
Pankaj, you mentioned you have historically loved the IT pack. This pure play IT, which was a story so far. Today, of course, and I'm just spinning this question, I'm going to try and understand this. Would you also invest in companies that are leveraging IT for growth? Because then that universe expands even more, right?
Oh, absolutely. So one, maybe on the IT services, and just giving my anecdotal experience.
Yeah.
When Infosys hit $1 billion of revenue in 2002, we thought the IT story is peak because Infosys is already some 70,000 employees. The fact is today, after 20 years, Infosys does $18 billion of revenue. And I think Infosys is a growth company for the next 15 years.
Wow.
So, but yes, you're right. So I think IT services are growth, but I'm very excited about technology and internet companies in India.
Yeah, and also, like, for example, Mihir said manufacturing.
Yeah, so manufacturing technology across the board.
Yeah.
It could be manufacturing tech or this thing. Just give you an anecdote. The largest stockbroking company in India is 15 years old, and it's a digital company. It's run by a person who's not a traditional broker. I think the largest financial company in this country will be a tech company which will not be run by a banker. 15 years old. Technology is going to challenge each and every business.
One thing, everyone watching who has got kids, they should be studying engineering. This is it. Just software engineering.
Oh, absolutely,
AI,
absolutely. Technology is going to change the world. And technology has reached an inflection point because of evolution of AI and what we are seeing kind of a thing. It's my firm belief that the AI wave over the next 10 years, which will be much bigger. The biggest wave in technology that we've seen was the internet wave in 95. The next wave over the next 10 years, in terms of what AI does to each one of us and every business, which will be far more profound and far more deeper than what internet did to the world. So anywhere in the world, you cannot not afford not to invest into technology. And the beauty is in India, we're at the heart of it.
So which companies would these be? You mentioned HDFC Bank, and clearly you like that one. But
well, HDFC Bank is a more traditional bank, which I think
tech to grow.
Well, so as I said, I like fintechs because as I firmly believe the largest financial sector company in India will be a tech company and not a traditional bank. And it will be run by a techie and not a banker or a traditional finance guy. Because traditional finance guys cannot think non-linear.
And the disruption can be, completely out of the blue. I mean, I think even 2 years ago, we would not have thought that Kirana shops would be complaining about quick
Yeah.
delivery service,
Quick commerce, exactly.
quick commerce, And in the last 1 month, I've read at least 5 articles about Kirana
So what, both of
shops,
you buy Zomato?
FMCG distributors complaining
Zomato
that
is
I'm an owner, so I have a bias.
Yeah, to Zomato.
I have a bias. Just one more data point, just to put this whole thing into perspective. Today, if you look at US, tech is about 20% of the market cap. Yeah. In India, if you leave aside IT services, tech is under 1% of the market cap. I have no doubt that some of the leading companies of India, or amongst the at least 10% or 20% of the top 50 companies of India, in the next 10 or 15 years will come from technology.
So we have a tech bull here as well, right?
Oh, okay. So consensus view on tech,
consensus view, because I want to understand IT services or tech-enabled companies or a mixture of both, or something else is your top draw. I'm asking top draws, right, to each of
I
you.
think, see, again, the thing is, I might want to play AI, but I should have a playable play, right? So I think the thing is that you have to see, the way I see is that anything which is giving me, non-linear growth or a very accelerated growth, I like to say. So within IT services also you can find company which are product-oriented companies. I mean, we've been invested in a company called NewGen, which has kind of done phenomenally well, and product companies just kind of have always a J-curve kind of. So, and those kind of companies will come in India. Today we have hardly any, right? But they will be there. Within that, ER&D space is growing very fast. There you will find companies. So the way I see is that you got to pick up spots. There are cyber security, which is again a very big opportunity, and there you will again see many companies looking to see J-curve. So technology has lot of nuances. So one is a pure tech play, and secondly, the way I see is that internet was a great sort of boom. But point is that there is no internet company exists today. So the way I see AI is like internet. Everybody will use AI. See, everybody use internet. There's no big deal about
Definition
it.
has changed.
So everybody will use AI, and we are using AI, and we will use more of AI. So I don't think AI will become big thing. AI will be, normal course of life for everybody. So hence, companies who adapt using AI and related technologies will be the ones which will continue to grow, and who don't use probably will lose the market shares and all those things. So hence, I believe that, and a lot of companies like ICICI Bank, according to me, is a great adopter of technology. I don't think there is any bank which has adopted technology as much as I, including so a lot of fintechs and all. So I believe that winners would be the ones who are having a traditional platform and are able to adapt,
Leverage that.
leverage that, and be agile, and those are going to be the future big winners.